a name synonymous with institutional excellence, and having served as the former general manager of the State Bank of India and a former
the stock market and the crowdsourced funds from the stock exchanges to submit monthly reports, which are called as BRSR reports, wherein they see how the company is in alliance with a rating agency rating of a corporate. And I will share the entire details of how step by step we navigated through his data. If you do not share that profit with the stakeholders, like your employees, your workers, your government, your banker, your advisors, and simply corner away, like a Lala firm, all the profits, then ultimately, uh, as per his greed, then probably he might accumulate those products for some time, but he will not be able to enjoy those products and he will not earn a good reputation in the market. So, ESG concepts observance tax, if you employ color which is harmful to the skin, if you employ labor which is underage, if you do not pay them wages, so these may be indirectly financial, but these are non-financial issues because they are NRI remittance every year. It is also getting huge amount of money in stock exchanges through various types of loans to various companies. Now the movement of money is focusing on renewables. Wipro is developing a circular economy models. You know what is circular economy? Circular economy is use of waste into productive purposes, but it is directly coming from fossil fuel energy. So those are called as scope 2, on which you have very little control. And scope 3 is how your managing director travels, how your employees come, whether they come through MSME. They are employing more than 40% of labor force. They are doing more than 40% of exports. But unfortunately, this ESG concept is still not caught very deeply with MSME segments, regulatory risk, and credit risk. We will be delving on all these risks subsequently, but you know that a industry lives by its reputation. Europe and US, the large investors, the Blackstones, they all are observing the observance of ESG compliance by the units, so that their money, a large number of very senior banking executives, it also comprises of middle level managers. Why I'm focusing on middle level managers is, till then we will not be able to really make the targets which government of India has committed to United Nations of making this our India net zero by, probably you would have done your job. And for every middle level manager today in banking industry, car loan is one of the very smallest and easiest loan to give. Then when you are giving housing loans, can you not insist, percolate the culture of ESG following? Friends, now we come to the topic of the day, having created small background about ESG, and try to comprehend what are ESG ratings. The ESG rating officials evaluate sustainable management of water, material, and waste. The amount of water which a factory consumes is also very scarce. That also gets positive marks during the rating. Similarly, observance of environmental policies, like the regulatory authority says that you should not emanate fumes from your chimney, energy consumption, water use, waste management. It looks at efforts in adopting energy saving measures, promoting waste reduction, and using energy efficient equipment to conserve energy. So this is the E part, which these rating agency officials, whether the board structure is multifaceted, whether the directors are knowledgeable, they are not only the relative sons of the owner, but they are experts in the industry, worth say more than 500 crores has to have a risk management committee where again the board of directors, especially from banking segment or insurance segment, are there so that the non-compliance of ESG should not create unnecessary credit risk in your portfolio and create non-performing assets. Friends, who are the leading players? Now, before this meeting started, one very senior official had dedicated ESG rating as well. Now, these companies are CRISIL, CARE, ICRA. They are all domestic companies. Of course, CRISIL is funded from abroad. Similarly, it assists investors, stakeholders, and companies in assessing non financial risks and opportunities. And it highlights agencies rely on publicly available information from annual reports, sustainability reports, and public filings. Agencies track news media and the internet for adverse events such as significant environmental fine or labor dispute in a company. This is that case study, which after a few slides, I'm going to present to you. There are very interesting, revelations in that. So please do wait. After I finish this presentation in a few minutes, I will do a case study with you, which is a genuine within the bank also. Don't leave all these, lights switched on, fans, air conditioners switched on. Don't fill your locker room with used printers, computers, and laptops. Initiate the process. Align with corporate strategy. Ensure that the company's ESG goals align with the company's broader sustainability objectives. Prescribe a smart framework. Don't finance generators which run on diesel. Such specific, measurable, achievable, and relevant, actions if you do, and if the factory also does in a time-bound manner, then the ESG rating will improve. They store this key data into a matrix and then use this matrix to find out the various non-compliances. Now the easiest way is to ask for electricity bill for the last, say, the ESG compliance or not. And if they give a stock statement which does not capture these things, that means the data is not pure. It is just cooked up data, an excess towards your operating system. And I want statements from there. I want to see electricity bills, I want to see water bills, I want to see salary bills, I want to see how many males are there, how many females are there, I want to see how many generators are there, I want to see how many tube lights, how many the ultimate rating of a company. If you get the data and don't analyze it properly, don't report it properly, not only as a banker but as a company official also, if you do not report in your BRSR to RBI that you have done so much. So please use data to evaluate the impact of banks' sustainable finance activities, since funding ESG compliant borrowers also helps the bank's ESG rating. Today, I was in a discussion in the morning. Now that coal company is creating so much of carbon. So the customers which you have in your bank act as an advisor, not merely a lender, to help clients navigate sustainability complexities which benefit their businesses. Friends, the other important thing is that how do we integrate ESG observance into credit analysis? If banks would have gone into the history of that place, that this is susceptible to wildfires, probably they would not have taken such a big exposure. Out of 100 marks, give 20 marks each for compliance of scope 1, 2, and 3 emissions under E, and remaining 40 to S and G disciplines. In Chhattisgarh and all that, when we used to go there, they were barren with smokes coming out. Now, when we go there, we find that there is so much of greenery, green belt, green steel, green processes, and you can really live there. Communicate the bank's commitment to sustainable finance to your teams and clients, and show how sustainable finance can drive both positive impact and long term financial success. The future of ESG is very, very bright. To take this ESG movement forward, and as a banker, we must also join this bandwagon. Best practices for middle level managers are educate your team, and the process. We deeply analyze the process and then find out the levels of carbon emissions and the points where this company is negligent about observing the and how much is the process, whether it can be shortened. Even a single stage reduction in process can save so much of energy, thereby less burning of fossil fuel, less creation of carbon emissions. Now, these are to be kept in mind. These are standards fixed by a committee under United Nations. Now, these are a sort of benchmarks which cannot be, and scope 2, wherein they were buying electricity from Rajasthan electricity boards at Bhiwadi, and this much of electricity they purchased. This was so total scope 1 and 2 emissions were this much. And there were various diesel vehicles, and the managing director and his staff were coming in dieselized cars, so we asked them to change them to green cars so that they understand where the wastage of electricity is happening. And then for awareness, we told them to display posters across the industry, spreading awareness among staff members and workers to switch off lights and fan when not in use. Staff members and workers should be encouraged and rewarded to using carpool for their daily commuting. Apps like Uber Pool, Ola Share, Ridely, Go. So, similarly, energy consumption and GHG generation was observed, water resource management was observed, biodiversity was observed, local and accidental pollution was observed, accident history was there, insurance claims were checked up. Despite their improving their product processes, they're observing all the norms, they could score only 62. These are various things, these are the products of company which they make. They are all agriculture products, so they are converting agriculture and they are exporting to 100 countries. This product which they make is the content of toothpaste which everybody uses. For board of directors, you should have one-to-one meetings quarterly, twice or thrice. Even the legal authorities, you must report all the. There was validation of plant processes as per regulatory and customer standards, which they must get done. This company, since it is exporting worldwide, it is US FDA approved. So we went into the verification of the certificates. When was the US FDA? And energy consumption was totally analyzed, how much of diesel they've used last year and this year. Now they were committing that they are improving. So if you see, last year they had used this much, it is reduced to this much. Similarly, petrol, but petrol consumption has gone up.
To indicate to me that you want to speak, and I will give you an opportunity to speak and ask your questions or make your observations. And we'll start with the observations of Shri M.B. Tansale.
Yeah, so my compliments to Hargovind for making the subject very simple and very understandable. The Indian Bank Association worked on these guidelines and brought out the guidelines for responsible finance. We call it voluntary guidelines for responsible finance, which were brought out by around 2016-17. Questionnaire kind of a thing, and provide a questionnaire to the borrower himself, that he submits the compliance or he submit the response to the questionnaire, and then you do the counter checks. And AG score should have the bearing on the rate of interest. It already has a bearing on the investor side of it. The global investors, no global investors is investing unless there is a ESG score available. So if this information is available with all of us,
because achieving net zero is something that need to be decimated from top to bottom. So what are the measures and how can we guide MSMEs at bottom level to have a ESG governance?
Thank you, Shashank. It's a very, very important question, very pertinent. The branch level, if you say, and you take a permission from your controller saying that, sir, I don't need any budget for dieselized cars, dieselized generators, and I will only finance housing loan to houses which are green.
the MSMEs which are operating in the rural or the semi-urban areas, they have their own terrace, they have got a, so I mean, as a banker, I should prompt them, "Can you please move over to the solar power?"
So my question is that we are working in a very competitive world. So we private sector banks, public sector banks, cooperative banks, and all other banks, including NBFCs and other finance companies. So how it is possible to
The
May
basic,
answer, let me
yeah,
answer you first, Shiv, that the RBI guidelines on the sustainability are applicable to all the regulated entities. So I don't think that the private sector banks have got a liberty.
capitalized company listed with the stock exchanges have to observe ESG norms, and they have to give a monthly report called as business sustainability and responsibility report. So the entire ecosystem is also gravitating towards this. They will enable, so no lender, whether it's a private sector, public sector, can now avoid ESG for good corporate credit.